Started. So good afternoon everyone, welcome to today's webinar which is around Directors and Officers Risks and Liabilities Insurance. My name's Louise Moles, I'm Director of Operations and Membership at SFHA. I think I've had the pleasure of meeting a few of you already, but I look forward to meeting you in person throughout the coming year, and I am delighted that all of you have decided to join us today. Our speaker today is Bernard Dunn, who is Client Director at TL Dallas. Now, before I pass over to Bernard, I just wanted to cover off a couple of housekeeping points, if that's okay. When you've come onto the call, your microphone has been muted. If you'd like to speak or ask the speaker a question directly at any point throughout the webinar, please feel free to unmute yourself, say who you are and say where you're from. If you prefer to type your question, then please add it into the chat. Karen and Cara will be monitoring the chat throughout. Bernard has confirmed that he is happy for you to just interject at any point. If you have a question, you don't have to wait till the end. If you're anything like me, you'll forget what you were going to ask by the time it gets to the end anyway. And, you know, we hope that you're comfortable to have your video enabled. However, you know, if you'd rather not be seen on screen, then you can turn your video off on the taskbar. And as you've just seen the pop-up before I started speaking, this recording will be shared after the webinar. That's everything from me. Thank you again for joining us, and I really hope you enjoy the session, and I'll pass you over to Bernard.
Thank you very much, Louise. I hope everyone can hear me okay, and I'd like to also add my own welcome to everyone who has taken the time to join this session. I'd very much like it to be interactive. Louise makes the point that don't save your questions to the end, and I would agree with that, because if we wait to the end, I might not remember what I've actually said to you during the talk. So if you've got any points, please put them in, and Louise or Karen will let me know and we can address them at the time. So Bernard Dunn's my name. My day job is with TL Dallas and Company as a client director, and I've been working in insurance and risk for longer than I care to remember, somewhere north of 35 years. I started life qualifying as a chartered accountant, but that was too exciting, so I decided to go into insurance. So I'm going to deal with three themes in the main today. The first relates to my own thoughts, not just as a director of TL Dallas, but also in some of my own non-executive roles on the duties in practice today that a good board should be practicing, a good board of directors, officers and senior management. My second theme will be around the importance of risk awareness, management and good governance as being absolutely critical today. And thirdly, I'm going to say some headline information around the SFHA Members Directors and Officers policy, umbrella policy, and why it's such an important part of your SFHA membership. So now I'm just going to screen share, and can everyone see that okay? Is everyone able to see that?
Yes, if you can. No, that's it. That's fine, Bernard. We can see that.
First class. Okay, thank you very much. So my themes will cover the following headings: duties and responsibility of board members, officers and managers, both exec and non-exec, and I've deliberately used the word managers, so I'll come back to that in terms of how it's included within the protection offered by the members' umbrella policy. Personal liability and risk, which is so important to have that covered, not least for claims for wrongful acts, but more importantly, the importance of having the protection of being able to call on defence costs and advice in relation to claims, because the majority of claims that are brought against directors, trustees and officers are spurious and are unsuccessful, but they still need to be defended. The importance of risk awareness and management, some claims examples and notification protocols under the members policy, and then some information around the members D&O policy itself, its limits, and some additional benefits just to highlight for members to consider and utilise. So I won't dwell on this too long because it's come from the Companies Act, and then I'll move on to my own thoughts on important duties. There are 7 principal ones under the Companies Act. One, that directors need to act within their powers. Secondly, that they promote the success of the organisation. Thirdly, they exercise independent judgment. Fourth, that they exercise reasonable skill, care and diligence, and I'll come back to that point in a second. That they should avoid conflicts of interest. They should not accept gifts or incentives from third parties, and they declare and disclose any interests which may apply to transactions or arrangements made by the organisation. Now, the reason I put in bold there the question of reasonable skill, care and diligence is, you know, if people were to consider joining a board and contributing their experience and their skill to a board, whether it's public, private or in the third sector, if they looked at some of these responsibilities, a lot of them wouldn't get out of bed in the morning. The whole important thing to say is that you do things to the best of your ability. Everyone is human and subject to human frailties and errors, but it's about being as informed as you can be, to recognise that every day is a school day and training is so important, but really to do the best of the job, the best to the best of your ability, and that's what's expected. It's not expected that everyone's perfect. So that I just wanted to emphasise that in terms of the importance of encouraging people who have potential to get into leadership roles and not be afraid of them. And so here are some of my thoughts. They're not exhaustive, but they're duties that I think, duties and qualities that if they're practiced, that makes for a strong board. Firstly, to execute your duties to the best of your ability, whether you're a director, an officer, a trustee, and I should have put in there a manager, you know, because many organisations have CEOs and directors who are not statutory directors, but still make critical decisions on behalf of the organisation. Secondly, it's vital to work as a collective group, sharing knowledge and experience, not just with your own colleagues internally, but with your peers. And certainly I've found from my dealings with SFHA that they're very good at putting people together, and it's a great community where people have worked together and they might now be in leading roles in different housing associations. So the sharing of knowledge is absolutely critical. Evaluation, monitoring and managing of key risks facing the organisation. It's important for the business, but if I'm being selfish about it, it's very important for insurers as well. We're beyond the days now of organisations filling in D&O annual declarations and D&O proposal forms. Claims are washing through for a variety of reasons, and COVID is certainly one that's accelerated claims made against directors and officers. And so you need to do a bit more. And if you can demonstrate how much you're investing in terms of human capital or cost in developing new people, bringing fresh faces onto a board and actually bringing a broad range of skills, that's important information for underwriters when they're considering what limits to offer and also what premium to charge. Another duty is to supervise the performance, not only of staff, but also professional advisors. So this is not PI insurance cover for negligence and errors and omissions. This is cover for directors and officers. But if there's a failure to supervise the performance of professional advisors, that of itself might be seen as a dereliction of duty. It is covered under the policy. You're not going to get a claim for a PI error, but you may get a claim if you failed to, say, put professional advisors out to tender, accountants, lawyers, whoever. And so really holding your advisors to account is just as important. Provision of governance and leadership and demonstration of integrity. Well, integrity is quite a hard word to describe, but you kind of know it when you see it, if I could put it that way, not wishing to be glib. But governance and leadership, again, it's internal and it's external. To be aware of strategic and longer term challenges. I'll give you a personal example there with regard to ED&I. I've just recently joined the board of trustees of a charity, and it wasn't just voluntary. Upon joining that board, I was told that I had to undertake mandatory training and a minimum of hours. And the first 3 modules that I had to undertake and did were safeguarding of adults, safeguarding of children, and equity, diversity, and inclusion. And one of the things I learned from that was I used to think it was equality, diversity, and inclusion, but it's not, it's equity, because some people just cannot be treated the same, and equality doesn't do it. So I was very grateful to have gone through that training. And a word about ESG. The members' policy is currently with Royal Sun Alliance, and a few weeks ago, some of us at TL Dallas attended a D&O update seminar from RSA, and the guy who runs the whole UK book for directors and officers liability, or its modern name is management liability cover, Craig Watson, he gave a very interesting insight into probably the area that RSA are keeping their eye on most closely in terms of potential claims, and it's ESG. In fact, he mentioned one PLC organisation who had delivered their annual report, and 90 pages of the annual report was on ESG, which is incredible when you come to think that most annual reports don't even stretch to 90 pages, including the annual accounts. So awareness of the ever-changing landscape on risk is a duty and a responsibility of a good board. And then in more simple terms, to be informed and to informed, keep educating yourself and to inform others. It's part of the sharing of knowledge. And as my old boss in the accountancy firm that I trained in, he talked about the importance of an inquiring mind. That's because we were auditors primarily, but that same inquiring mind is very, very important in a board environment, is not to stay silent and just work your way through the board papers, but to actually speak up, to question and go. There is no such thing as a daft question, but to have an inquiring mind in relation to matters arising from board minutes, in relation to a chief executive strategy. It's just always be questioning, and it's a very important but simple quality. And as you'll see, the pervading theme of this talk is about continuous personal development and training being absolutely key. Exec or non-exec, this is probably well known to all of you that in the eyes of the law, whether you sit as a non-executive director or an executive director where the role is your day job, the liability remains the same. There may be different degrees, and managers also have personal responsibilities, particularly around matters of health and safety. The managers can have can be exposed to personal liability. So it doesn't just sit at the top layer of an organisation. It can actually cascade down to senior and middle managers having personal responsibilities, and particularly in the board environment. And I've come across this in private companies where there are director owners, principal shareholders in an organisation, and then you've got directors who don't have any ownership, and one can find that there is knowledge that is only in the hands of 2 or 3 people, and it is not necessarily shared in a board environment. For those people who are not in an ownership situation, ignorance is still no defence when it comes to D&O claims. So, and a classic example of that was, of course, in the situation where Royal Bank was run in the early 2000s by a very domineering CEO, and there was a host of non-exec directors on that board, but decisions were being made by a very tight number of people, and there wasn't enough challenging. And of course, when the chickens came home to roost in 2008 for the in terms of the crash, Royal Bank of Scotland were found to be in a very powerless position. So I'll just make that point about being a non-exec. And a lot of people do say that being a non-exec is a part-time job, or being a chairman is a part-time job. Well, that's true up to a point, in terms of it's not just about the hours doing the pre-reading and attending 4 board meetings and maybe 2 subcommittee meetings. There's also the thinking time. So being a non-exec is in my view, by no means a part-time job, because if you're doing your job properly, you're thinking about it a lot, and that goes way beyond the actual hours that are in your contract. Is there a question?
No, not at the moment.
Not at the moment. Okay. And personal liability. Well, as I'm sure you're aware, because I know which is a great thing. I know a number of housing association members invest a significant amount of human capital and cost in terms of board development programs and the SFHA. I've seen details of the webinars and the forums and the conferences that are on, and a lot of these events, in my reading of them, touch on these areas of directors' responsibilities, and in particular in relation to governance. So it's great to see. But what I would say is it's a long time since directors and officers have had the protection of the corporate veil, as it's referred to in legislation, where because you are a director of a limited liability company, if the company went to the wall, you had that personal protection. No longer now, and civil and criminal personal prosecutions continue to be on the rise. And what's also on the rise are defence and investigations costs. And when I come on to talking about the guts of the members' D&O policy, it's largely split in 2 parts. One is cover for awards or judgments that might be made against an individual or a board of companies, or indeed the entity itself, for an allegation of wrongful acts. But as important, if not more important, the fact that the policy gives individuals the protection of defence and investigation costs and advice. And apart from the inevitable stress that comes with somebody making an allegation against you, the financial costs, and often over a very long period of time, sometimes years, it's a vital component of the D&O policy, that for individuals doing the best that they can as a director or officer of the business, have that personal protection. And I mentioned that some claims can go on for years, but liability and latent claims can often emerge years later, and sometimes after a director or trustee has actually retired from the organisation. And in insurance terms, these are known as long-tail claims. So they might relate to an undiscovered fraud. They might relate to abuse. They may relate to an injury or a disease that someone has suffered, which only manifests itself at some later date. And so it's very important, as I'll make reference to in one of the later slides, that directors and trustees, they're covered past, present and future under the policy, as long as the policy remains in force. So in terms of really moving on to the second theme of this session is about member board risk awareness and management. Training and ongoing personal development is vital. I mean, I say that from both a personal perspective and in terms of the organisation itself. My other main night job, as it were, out with working for TL Dallas, is I also sit on the main board council of the Institute of CAs of Scotland. So that involves 4 council meetings a year, which includes 1 away day. It also involves sitting on a couple of the committees and sub-boards of that. What I've found is that it's a big board. It's about 25, 26 people on the main council board. But actually, the great benefit for me is actually spending time in these people's companies. These have been, very experienced people from a variety of backgrounds. We're fortunate in that whilst I would say about 2/3 of the board are chartered accountants who have had a career either in profession or in industry, but 1/3 of the board are lay public members. So they bring a different perspective, and it brings me on to my second point. So even if you do have other positions on other organisations other than the housing association with whom you're working, it's a great thing to do, because it gives you yet another perspective back on your day job, because you're sharing experiences and learning from other board members. So that's my personal development, because people at my stage in the game don't get sent on courses very often. So actually sitting on outside boards is a great form of personal development. So I would encourage anyone. I remember the old boss, Ian Robertson of Scottish Power. He came and gave a talk to us in the Clydeport building many, many years ago. And he said Scottish Power, and it was a thing. Does anyone remember the government initiative Welfare to Work? Well, that was a long time ago, but Ian Robinson was the chairman of that. But he came and gave the talk to business leaders about Welfare to Work, and he said Scottish Power is my day job, Welfare to Work is my night job. And it always stuck with me, that about having something else going on which doesn't take over your life but gives you an extra perspective on what you're doing during the day. Really important. So training and ongoing development, a mix of opinions, skills and experience in your board, it goes without saying. And that's not just in terms of a kind of operational skill set like finance, HR, legal, IT and data, or a particular expertise, say, on housing development, but it's also that experience from different organisations as well, and bringing that and different mindsets as well. A board that comes from the same background and basically all agrees, it's not going to work. You need to have different voices with different views. Sharing knowledge, I've put internal and external there because sharing of knowledge internally is extremely important, but also finding out what others are doing is vital. And as I say, it seems to me from the outside that SFHA are doing a lot of that and bringing different members together. I mentioned also as a kind of a working model, I'm maybe teaching Granny to suck eggs here, but the existence and the maintenance of a risk register is a really important thing, more so nowadays than ever before. I have a number of clients that have got a risk register. It always goes down well with the insurers, and that shouldn't be the driver, however. But it's a really good document to go back and revisit around board meeting time, and if there's a significant change, if you're starting a new service, if you've bought another organisation, anything that is a state change, a material change in your business, that's always a good reason to revisit the risk register. And what the risk register is basically a working, living document to help you look at your operational and strategic risks facing the business. I'm going to give you 5 headings here, if I may, from a good one that I was looking at with a client a few weeks ago. First of all, strategic risks. What are the long-term challenges for an organisation looking ahead? Operational risks. What are the risks that keep you awake at night? Could it be the loss of a key person, either leaving the business or unfortunately unable to fulfil their duties? Is it a key piece of plant and equipment? Is it a key customer? Third one would be around, and I've branded these together, financial and data security, because cyber is a far greater risk now in terms of potential claims, crime-related claims, but also accidental or malicious virus-related attacks. Compliance. Well, my industry is subject to significant compliance and audit. You have the housing regulator. We're all subject to compliance from HSE and other bodies. And so compliance risk is extremely important. And finally, reputational risk. That's one which is extremely important. You're dealing with, you're dealing with people, you're serving people, whether they're tenants or owners. And if something goes wrong, if something bad goes wrong, how is that going to hit the reputation of the business, and how do we manage and try and protect against that? So that's not exhaustive, but this risk register that I was reviewing with a client, I thought those were 5 really good headings. And unlike these slides, 5 is about enough. So I was always told speak in 3s or 5s. Some of these slides have got more than that. But in a risk register, if you can compartmentalize them, then that's a good group to start with. And what, of course,
sorry, see, just before you go on, we've had a question come in just in relation to what you've just said. So it says, can you explain further about the past, present, future cover? What happens if there is cover at the time of an incident or decision, but no cover at the time of a later claim about it? Or there is no cover in place at the time of the incident or decision, but there is cover at the time of the later claim?
Okay, so I'll deal with that now. Past, present and future means that if you were, are, or you become a director or officer during the policy period, then you're covered. The caveat is 2 things. One is, the organisation has to keep renewing the policy, because if something happened 5 years ago, but the claim only manifests itself in a particular year, and you gave up the cover a year ago, it's as if you never had the cover. So directors and officers is insured on what's called a claims made basis. It's when the claim comes in that the policy has to be enforced. Now, you know, you may say, well, this terrible thing happened 5 years ago that only manifests itself now. Well, when insurers are actually writing a policy for the first time, they do ask questions, you know, key underwriting questions around, have any of the directors been disqualified? Have any of them declared bankrupt? There's a series of risk analysis questions that you have to answer when you're applying for directors and officers cover. But if in good faith you are not aware of anything that has happened after inquiry, and then a claim comes in, you'll be covered. Because so it's when the claim or the circumstance manifests itself, and I'll come on to I'll explain what I say about circumstance in a wee while. So the situation is, if there was no cover when the incident happened, that doesn't mean it's not insured. Because if you have a policy in place, what you have to do in that situation, Louise, is you have to ask for a retroactive date to take you back to when the company started, or as far back as possible. So if something happened 15 years ago and then you buy cover today, most insurers will start by saying, well, you've got cover today and it's from any event going forward from today. But you would then ask for you would ask if we can have a retroactive date going back a while. So often you get startup companies, for example, but they have to scale their insurances up. And then they get a non-exec on board, and the non-exec says, have you got directors and officers liability policy? That's a condition of me joining the business. So you say, right, we'll go and get that. Now, you would normally, at that point, you would say, can I please have cover from when the company incepted? You'll probably not get it back for 15 years ago, but you would get it as a reasonably short time after the company started. But if you had an incident, and then something came through some years later, as long as you've got a policy of insurance in place, you will be covered, subject to the retroactive date. So the key message is, you have to be insured when the claim comes in, because if you stop insuring it and then a claim comes in, even though it was 5 years ago, there's no cover. Okay. I'm happy to talk to any of the delegates offline if they wish to sort of go into that in any greater depth. Are there any other questions on the board, Louise?
No, Bernard, none just now.
It's fine. So just now, I'm going to mention some claims examples. Some of them you need to bear with me because I have to read them out. So I've done a wee bit of digging just to see what we can get, because we don't get too many directors and officers claims, but when you get them, they do cost a lot of money, not least in terms of the defence costs.
Sorry, Bernard, can I just before we move on to this, there is another question came in, and it's from Lorna, and it said, is SFHA insurance retrospective?
Well, I've been dealing with SFHA for over 10 years, and the SFHA members policy was in place before my time. So that's a good question from Lorna, because it's very important to have that continuity. What I do know is that Lorna, I can check this back, which I will do, but I'm pretty sure that the members D&O policy, the umbrella policy, which is almost unique, has been in place for at least 12 years.
Yeah, I'm just checking the retrospective date. It definitely is one on it, Bernard, and I'm just checking that just now, and I'll put it up. the chat.
Yeah, but the policy, yeah. Anyway, Maureen, thank you for that. But it's certainly this policy was in place when we started dealing with SFHA over 10 years ago. Okay, so here's some examples I want to mention to you, and this was very sadly, the first example was an HSE prosecution which took place, investigation and prosecution after one of our clients suffered a fatality in the workplace of one of their employees. And one of the reasons why the policy was so important was it had the potential for HSE to look at prosecution of individuals as well as the company. Now, running alongside this investigation, obviously there is, I don't want to mix up D&O cover with employer's liability cover. Employer's liability claims ran on, it took their normal course, but the potential of a claim against the entity as well as individual directors and officers was very real. And how it manifested itself was that the HSE, when they came in after the incident, wanted to interview not only the chief executive, but also other directors, the ops director. They also wanted to interview the engineering manager, the shift manager, and the team leader of the person who lost their life. So that's how far it went down, the organisation. And all of those people that I've mentioned would have the protection of the D&O policy because they had a role as a manager. They were responsible for people, or they were responsible for making decisions. And what happened was the insurer at the time engaged a firm of solicitors on their panel, and what that solicitor did was they did a terrific job. They came out and they spent time not simply with the senior, the CEO and other senior board members. They actually did one-to-one sessions with each of those line managers who was going to be subject to an individual interview by the HSE. Now you can imagine the prep, and also the lawyer offered to sit in on the HSE interview as well. So you can imagine how stressful that would be for a team leader or a shift manager, finding themselves getting it hot and heavy from the HSE and following a fatality. That legal advice and that assistance was all paid for under the D&O policy. Now, in the end, and there was also significant costs associated with the HSE investigation, which was also picked up in the policy. What's not picked up in the policy was the company had a £70,000 fine imposed upon them as a result of that. The directors and officers were not in the event, they were not sued, but the company received a fine. Fines and penalties are not insurable. So that you can understand why that wouldn't be covered under the policy, but the costs associated with the defence and the investigation and the assistance that was provided, that was picked up under the D&O policy. So that's these things happen, and so it's very important that the coverage was there. And the second one I want to mention, this actually forms part of one of the extensions to the D&O policy, so there are two principal parts, as I mentioned. There's the cover for the directors and officers as individuals for wrongful acts, and there's also including defence costs, and there's also a section for the entity itself, the board as a group and the company. But what it does not cover employment practices liability. Now, you may ask, why have we not got employment practices cover for the entity? And the reason is because this is a unique policy in the sense that it covers 140 plus members as part of the membership. But if RSA were underwriting, they would have to look at 140 standards and methods by which the HR and employment processes are done by each housing association member. So that's why they can't give that cover. So it may well be that some of the membership will have their own EPL policy. But what I would say is there is an extension, and this is important to note, because it actually, there was a claim a few years ago about this, was sometimes when an employment practice claim is brought, which could be to do with harassment, bullying, it could be to do with redundancy, it could be to do with wrongful dismissal. The action in question was brought against the entity, but also against the chief executive and the chairman individually. In the case of individuals being held liable by way of a claim, this member's policy will cover that. So it's one of the important extensions on that policy, that even though, you know, don't think that if we've got EPL cover, no, not under this member's policy. But if a board member is individually drawn into a case, the defence costs dealing with that against them or any awards made against the individual would be picked up under the D&O cover. So that actually happened. In the end, again, there was defence costs incurred. In the end, the claims made against the chairman and the chief executive fell away, and the employment practices claim continued against the entity. I don't know what happened about it.
Bernard,
Yep.
we have a question in from Sharon from Forth, but before I read the question out to you, can I ask you a question on, because that's a real, that's a huge benefit in terms of this policy, but to what level of management does that cover around the employment, the individual potential claim that could come against? So is it for sort of only people at director, non-exec director level, or would it be like if you're health and safety managers or your HR managers, would it cover them?
The answer is, it's a very wide definition of people that are covered under the definition of insured persons. It includes directors, trustees, officers, members, and managers.
Okay. Okay.
So you don't have to be a Form 288 director to have the cover.
Okay. Thank you, Bernard. And Sharon's question, sorry, Sharon, can I hijack your question there? Sharon's question is, I presume the cover may only go back as far as your own organisation's membership date.
I think the answer is yes, but we'll need to check.
Okay, great, thank you. We'll come back to you, Sharon.
I think it is. I think it starts from when you join. But that's a good question. And between myself and Maureen, I've got my colleague on the call. Maureen, can we talk about that after? Yeah, okay.
Thanks, Bernard.
Okay, no, that's Sharon. That's great. But yeah, we'll look into that for you. But I think you've got to join the club first. If I could put it that way.
That makes sense.
Joining. Okay, thank you for that. The next example. These are sort of the examples I've got, say club and association. It's definitely not a housing association, this. And this was one, I'll read it out to you if you don't mind. The policyholder was a sports and leisure complex club. A member was publicly accused by another member of bullying and cheating. The matter was unresolved by a committee, and anonymous notes were then allegedly sent saying the member was not welcome at the club. Policyholder and the directors that's the entity and the directors, were accused of failing to stop the alleged abuse and indeed continuing. Police investigations followed and other members made allegations of bullying. A letter of claim accused the policyholder and or the directors of breaching common law, equitable and statutory duties that they allegedly owed to the members, and damages were sought based on breach of contract and the Equality Act 2010. Now, I haven't got a breakdown, but the total claims costs incurred by insurers on that event was £400,000. Must have been a posh club, but that just gives you an idea. If that goes on, you can imagine how that would have been quite protracted with members' meetings and what have you. But you can, once the meter starts running with having continuing advice and assistance, it can be very, very significant. Here's another one for a not-for-profit organisation. 5 trustees and board members were accused of manipulating grant awarding processes and of the misappropriation of funds. No personal gain was established in the investigation, but it was alleged that grants were given for non-qualifying properties and that close acquaintances were being used in the fulfilment of the contracts. 2 trustees pleaded guilty, whilst the remaining 3 were cleared, but the court concluded that no one personally had benefited from the missing funds. The total costs of claim, including defence costs, were £230,000. The last, there are lots of other examples, but I just thought 1 or 2 of these would be quite useful, and we're starting to see them potentially come through, and we do try and keep in touch with the insurers on what kind of potential claims they're dealing with. But I mentioned this in terms of the risk register, data security, both in terms of the theft of data, people's personal details, and the fraud process. That I'm sure many of the associations of SFHA will have their own cyber policy. It's now the #1 insurance policy that's talked about at our client meetings, and that ranges from manufacturing through to professional advisory through to property businesses, and whether it's accidental or a malicious cyber event, it's all about the defence and whether the systems are adequate to deal with it. And the feeling is from insurers is that cyber liability or personal liability arising from a cyber attack, in terms of a director or officer's failure to make sure the organisation invested in suitable defences against cyber attack, has the potential for a directors and officers liability claim. In fact, there is I'll just read it out to you briefly because it is very current and very important. Under the RSA, so what the RSA are saying is people should have their own cyber liability policy for the organisation. However, as an extension to this policy for members, RSA will indemnify insured persons, the ones I've described, against loss incurred by those persons arising from a claim that first arose during the period of insurance in respect of a cyber liability event. So that would include fees, costs and expenses reasonably incurred by insured persons in relation to such an event. So it's just something to be aware of, and but what I would say to you is, though, is it's very important in the same breath to say if your organisation doesn't have cyber insurance cover, they need to look at it. That's the most common claims that we're seeing coming in. So that's just a wee snapshot. This is important because so many of our clients don't think about insurance when there's possibly a claim, but more often something's brewing. So a circumstance is possibly a dispute, which might be internal. It might be a disgruntled, tenant or owner that has a beef about something. So something that comes to board level, which you think might manifest itself in a claim at some point. Don't wait to see if it becomes a formal claim. Let the insurer, you can never be too early to notify a possible circumstance, and you will get the support from the insurers right from the get-go. The earlier they can get in, and often what we find is we'll notify a potential circumstance to an insurer and say, we've been advised that there's a dispute going on. It may lead to something, but we're letting you know. An insurer will say, we'll keep a watching brief on it, so it's been notified for information. The important thing to point out about this is, if the board had knowledge about a claim or a potential claim, say 3 months before renewal date of the policy, but didn't notify it until 2 months after renewal, or they changed insurer from insurer A to insurer B to save £500 of the premium or whatever, that's a problem, because it's all about disclosure, so that an insurer is aware of the situation as early as possible. And the upside of that is that the insurers will give advice and assistance. I have a slide coming up which talks about the additional benefits for policyholders in terms of advice lines, in terms of a query that you might have. The third point on notification is, just put that call off. The third point I want to mention is, please don't engage your own solicitors unless you're in the full knowledge of, by doing so, that you're meeting those costs. So an insurer has their own panel of solicitors whom they engage to deal with claims or possible claims. But if you're already down the track for 2 or 3 months talking to your own legal advisors, whether it's an employment matter, a housing matter, or whatever it is, then they won't approve those costs under the policy. If you go to the insurers and say, we use a firm of solicitors, BTO or whomsoever, or Dentons or whoever it is, we use them, we've used them for years, we know the partner, would you approve us using them under the scope of the policy for this claim? And then there's a discussion about that, and the insurers may well allow you to use your own solicitors whom you know, although they'll probably put a cap on the hourly rate of the fees. Okay, so it's just to make you aware of that. And the last thing I would say is, in terms of guidance, TL Dallas, as I said, we've been working with the SFHA for quite a long time. Please don't hesitate to phone myself or Maureen or one of the team if you need to ask a question and you want to have a chat before you actually go down a formal route of notification with the insurers. And it might be even it's a question about risk and risk management. Happy to have a discussion. Now, just a quick word, probably overrunning here, but I've not long left. SFHA, the umbrella policy, I won't dwell on this. It covers directors, officers, members, trustees, and managers. So remember, if someone's in a management, has a management role, they have the protection of the policy in terms of alleged wrongful acts in the conduct of their duties. I mentioned not criminal there because there isn't cover for criminal acts, but if you're being investigated with the possibility of a criminal prosecution, you have cover up to the point that the criminal act has been proven or admitted. Okay, so you've got that. Secondly, it provides cover to the organisation and the collective board, but I've obviously put in the point in red there. It doesn't include employment practices claim against the organisation, but it will give cover for an individual insured person. And the very important thing of the investigation and defence costs, because of some of the examples I gave earlier, a lot of the costs to insurers were the defence costs. The members' umbrella policy limit is £10 million. Okay, the most important thing for you as individual members is the limit is there is an inner limit of £1 million any one insurance year for individual directors, officers, trustees and managers. Okay, so that it sits atop when there's a kind of overarching 10 million. So if 10 housing associations make 10 claims for £1 million, we have to go out and buy some more. Corporate organisation, that's the section limit. If there's an action brought against the entity, that's £1 million as well. And as I mentioned, there are various extensions provided under the members' policy. There's quite a lot of them. They're enshrined in the policy. Some of them will relate to pollution. There are some that relate to unpaid taxes. There's a reference to retired members, but don't be put off by that, because as long as the policy remains in force, even if you're a retired member and you've left the board, you still get the benefit of the policy. And then the last point makes reference to past, present and future. And lastly, just a quick point about some of the additional benefits that you should, if you're not aware of them, there's a health and safety advice helpline on both civil and potential criminal matters. There's a tax advice helpline. There's also a confidential stress counselling service line for board members, managers, if they want to call that. And then there's a specialist legal advice service line, including legal defence advice for individual matters on any wider matter. So here are some of the takeaways, and I'm sure that Karen and Louise will share the content here with you. Importance of ongoing training and board development goes without saying. Most of you will be aware of that already. Sharing of knowledge and experience. A formal process of identifying, evaluating, and managing your risks through the risk register. The importance of the SFHA Members Umbrella Protection Policy, it's very important. This has reminded me about something, because it came up last year. I know that some housing associations have subsidiary companies who provide other additional services. And some of those group companies are not SFHA members in their own right. They don't have access to this policy unless they become standalone members. So just needed to make you aware of that, because it was a question that was asked. I think it was about 2 years ago. COVID, I get everything wrong by about 2 years since COVID, but it was that was a question that was asked of us about either an acquired subsidiary or a startup. You need to have standalone annual subscription to SFHA to have this policy, the benefits of it. And between ourselves, SFHA and your insurer RSA, the services and advice are there, and please use them. And just to wrap up, is insurers do take cognizance of the work that you do to manage risk and to make sure that your board members and senior management team are as qualified as they can be and informed as they can be to do their job.
Bernard, we have a question.